Hello, everyone, and welcome to the Real Estate Institute's workshop on finding housing on Long Island. My name is Sean Deary, the Senior Marketing Intern for the Real Estate Institute. And we have 6 panelists on for our discussion today about housing. I'll let them introduce themselves, but first I'll give a quick introduction to what the Real Estate Institute does. We're a nonprofit organization associated with the College of Business at Stony Brook. We provide workshops for the students as well as industry professionals, networking events, research, internships, and coursework available through the College of Business. We also do thought leadership for current topics within the real estate industry, trying to educate individuals so that they can not only work in the real estate industry, but find housing and continue to advance economic development on Long Island to benefit all of our citizens here. So I'll start off with having the panelists introduce themselves. Let's start with Michelle, if you'd like to introduce yourself and what you do at the Long Island Housing Partnership.
Thank you, Sean. My name is Michelle Abreu. I am the Director of Counseling at the Long Island Housing Partnership. We service all of Long Island. Of course, if you live in the city and looking to come to Long Island, we're here to help you. Basically, what we do is provide education and support for first-time home buyers, but we also have some awesome programs for those who are looking for affordable rentals and for homeowners who are facing financial distress and difficulties with their mortgages. We also provide counseling for that as well. So we pretty much do a little bit of all. We've been 30 years plus in the business. Most of our services are free, which is awesome. So if you are interested in knowing a little bit more of what we do, our website is full of information. I'm not sure if we're going to provide websites at the end, but it's lihp.org. You can always see what the latest grants are for first-time home buyers on there, what the rental programs are, and any additional information.
Thank you. Mark, would you like to introduce yourself? 1 second. Ask to unmute.
Hey, I'm Mark. I'm a senior loan officer at Meadowbrook Financial Mortgage Bankers located in Westbury. We're what's known as a direct correspondent mortgage lender. So the simplest way to think about it is that we're a bank. So we fund loans in our own name with our own money. And our only business is residential mortgage loans, which kind of allows us to offer a much more focused service towards clients as opposed to a big bank, who's doing personal banking, personal loans, 100 different things. Our only business is residential mortgage loans. So not only are we able to help a lot of buyers with more unique situations than big banks, because we kind of just have a lot of different outlets and methods to get loans done. But we're also local. All our underwriting is done on site in Westbury. We've been in business about 20 years. Last year, we did close to $1 billion in revenue. And this year, we're going to definitely eclipse that, just because it's just, it's been the busiest time really in the history of the industry. Everyone kind of attests to rates being down. And we lost the, spring, which is generally the busiest home buying season, was obviously not this year. So now everybody's out in full force. So now is really a good time to look at buying. And I, can kind of explain to everybody the mortgage process, which is really the most important thing in a lot of ways, because, if we don't have money, then we can't really purchase anything. So that's what I'd like to talk about today.
Thank you. Reza, would you like to introduce yourself?
Yes, Reza Ebrahimi, Twomey, Latham. We're actually a full service law firm located in Suffolk County, but we service all of Long Island. We do have a big real estate practice. I'd say at least 50% plus of my practice is real estate oriented, residential and commercial throughout Long Island. And basically any kind of purchase, sale, financing, development of real estate on Long Island, I can handle and our firm handles. So hoping that we can give some good information today that'll be helpful for everybody.
Absolutely, and your Riverhead location is pretty well located, because Riverhead is a unique spot on the island and growth area with potential to house a lot of individuals. Kelley, would you like?
Yeah, it definitely is. Yeah, it's there's a lot of development going on there, as in addition to other places like Bayshore and Lindenhurst, and a lot of exciting stuff.
their pattern book is also coming out with Riverhead. So that'll be interesting to see.
Yes, definitely.
Kelley, would you like to introduce yourself?
Sure. My name's Kelley Coughlan. I am a Vice President of Development at TRITEC Real Estate Company. TRITEC is a project delivery company. We're focused on the development, construction, and asset management of real estate in the New York Metro, primarily Long Island, and then the DC Metro areas. I'm personally on the development team, working on multifamily and mixed use, oftentimes transit oriented in nature, projects, ground up development across Long Island. So focused on Bayshore, Ronkonkoma, Lindenhurst, Port Jefferson, Patchogue, Hauppauge. So just a little bit about me.
Stick with you for the first question, which is how did Long Island develop? And as a developer, you have a unique perspective on the industry as well as the region as a whole, because you look at not only the markets, but also the different zoning codes and how these locations are developing. So can you give a general overview of how Long Island developed as a region?
Sure. I guess just as a little bit of background, I'm not sure how familiar everyone is with the history of Long Island, but Long Island developed the first suburb back in the 40s, late 40s, Levittown. Levittown was quote unquote the American dream and mass produced single family residential homes in suburban neighborhoods, which made them more affordable. But from Levittown also stemmed a number of challenges and issues, environmental, racial, zoning challenges. But if we take a look at Long Island historically, our uses are segregated. You know, we have your single family residential home neighborhoods, you have your office park, and then you have your shopping centers, and you have to get in your car and drive to each one of those separate uses. But times are changing, demographics have changed. Our housing stock, however, has not. It's remained relatively stagnant. If we take a look at, you know, changes in that family composition across the country, not just Long Island, you know, we're seeing dramatic increases in single person and single parent households. But our housing stock, again, has not changed in order to meet those changing compositions. So rental housing in Long Island makes up 21% of our total housing stock. If we take a look at neighboring, you know, competitors or across the country, it's typically 30 to 35%. So that gap translates to somewhere around 100,000 rental units missing in the Long Island market. And if any of you are familiar with, you know, basic supply demand curves, we are very undersupplied on rental housing relative to the demand, which has direct implications on the cost of living. And that cost of living, you know, in terms of affordability and, has, eventual economic erosion implications. So TRITEC has focused on rental housing for, we started looking at rental housing because we were losing, we started noticing an exodus of a young, talented workforce, these young, talented professionals leaving Long Island. And if you don't have those young, talented professionals in your pipeline and an economic pipeline, you're going to see economic stagnation. And so how do we address this? And, one of the primary, roots is that lack of affordable housing, or those lack of housing options from all income levels, and all types of housing. So that's a little bit, I guess, long-winded of housing on Long Island.
And just to build off of what you were saying is that single family homes really presented an opportunity back in the 1930s and 40s to create a new form of housing beyond cities that was very well achievable as well as desired. And that's why single family homes spread throughout Long Island as a region, because everyone wanted to have the extra space to raise a family and get involved with their local community. But now that we live on an island, we do see the limits of single family development and how that is affecting our economic development as well as affordability, as you explained. And Long Island as a region, we have so many assets, such as the natural preserved areas and the beaches, and even the infrastructure that allows us to access the city. And we're essentially a secondary market to one of the largest cities on the planet. And we see benefits to that. We have cultural centers across the island. And that's why it's so desirable and expensive to live here. And that's why it's so important to figure out how we can adopt our new housing styles to meet the demands and needs of our residents. So, Michelle, with all these different individuals trying to live on the island, and we're all competing for single family homes, what does that leave us with as a housing market?
It's hard because the majority of our clientele is in the 80% HUD medium income. So when they come to us, one, they're looking for assistance, and we're providing that. We're giving them the education. We're seeing if they qualify for down payment assistance grants. Because unfortunately, since the rent is so high on Long Island, it doesn't leave much space for them to save for that down payment. So there's some great programs out there that a lot of them we administer at the Long Island Housing Partnership that can provide that initial down payment for the clients. But we're seeing it has become more and more difficult. The market right now has exploded. The prices on the houses are going for more than they're listed. So our clientele is having a hard time of finding affordable housing out there. And I think that's always been an issue on Long Island. We definitely have to create more affordable housing. And that's what the partnership is doing. We're in the process always of seeing what we can do. We build houses from scratch to be able to sell to our affordable prices. Right now we have one program called the Community Land Trust, which is houses that we're building from the ground up in the low 200s. But you have to qualify. You have to make a certain income. You can't be above a certain income to qualify for these homes, because we are trying to help those that normally wouldn't be able to purchase on Long Island. So I think more people have, more contractors, more builders, need to get on that page of allowing for affordable housing, especially when they build these huge complexes. I know by law there's a certain amount that need to be affordable, but those fill up really quickly. We definitely need more affordable housing, but grants do help. They definitely help first-time home buyers to be able to get their foot in the door and purchase something on Long Island.
Absolutely. And government is one of the main ways that these different zoning codes have been developed, and how the supply is interfaced with the individuals who can actually build this housing. So Reza, could you overview some of the government structure that Long Island has to give a bit of an overview of why we have these housing types?
Yeah, so, look, the basic government structure is you have your federal, state, and county, and everybody knows, most people know it's Nassau and Suffolk County. But when you get further down from there, you're going to have the towns, hamlets, and villages, which is somewhat of a unique thing in Long Island or in the Northeast that you don't get in other parts of the country. The important thing I think to note for our discussion in context is that zoning is always done on the lowest level of government. So if you're in a village, the zoning code that's going to apply is the village code. If you're in a town, it's going to be the town. There are some provisions in the county and state that may or may not apply, but that's really where you're going to be looking. And, the original public policy of that is the theory that, the lowest level, the community itself on the ground is the one that's going to be most responsive and know more as to what the people that live there want, which really the zoning code is supposed to reflect that. But of course, if it remains rigid and doesn't change over time, that doesn't necessarily match what the community needs at any given time.
And one of the ways that we're trying to update those zoning codes is to allow for more mixed use as well as missing middle housing. And I'm going to allow Kelley to explain a bit about missing middle housing, and then I'll ask a few more questions about mixed use as well. So Kelley, what is missing middle housing?
So missing middle housing, it's a movement to help solve that mismatch between what the U.S. housing stock currently has in place, and then what we're seeing with shifting graphic needs in walkable neighborhoods. So we're looking at a range of housing, it's somewhere between the scale of single-family homes and mid-rise homes. So it includes everything from accessory apartments, townhouses, cottage houses, smaller multifamily buildings. So again, it's middle because it sits between single family and mid-rise, and then missing, again, going back to zoning codes, primarily, it's been illegal or restricted since about the 40s.
And you mentioned walkable neighborhoods, and a lot of the density on Long Island is somewhat pushed against because we already have issues with transportation and congestion. So what is the focus on downtowns, and how could that help improve the growth of Long Island?
So, when we started looking at multifamily development, a number of us flew around the country to areas where we saw growth in that young, talented workforce market. It was areas like, Seattle, Atlanta, Portland, Oregon, Portland, Maine, obviously the boroughs. Why are they moving there? And it wasn't necessarily because it's cheaper. I lived in a shoebox in New York for my first few years out of college. But those areas offer, amenities, walkability, vibrant, active communities. You can walk out your front door in the morning, walk to work, grab a coffee, get a beer with friends on the way home. It's a lifestyle choice. And so we have been, and we're starting to see that change on Long Island, but we've been lacking that. And so if we take a look at Long Island, when big box stores started popping up, they popped up along major roadways and highways, and it really sucked the demand out of our downtown centers. So we saw big declines in our local downtown economies as these mom and pop stores started drying up. People like their suburban neighborhoods and their white picket fences. It's why, a lot of people move out to Long Island. And then, as you had mentioned before, we have such an extreme lack of natural resources left, raw land. So trying to protect both of those, leaves us with our downtowns where we're looking to densify. And so putting in densified housing in these downtown areas helps promote walkability, putting feet on the street, increasing, the support of the support of the local economy growth. So I think we worked in Patchogue. We developed New Village at Patchogue, which is a $112 million mixed use development right at the Four Corners in downtown Patchogue. I think it's a good example of the growth and the revitalization efforts that we're seeing in some of these communities across Long Island. When we first started looking at Patchogue back in 2007, there was over 50% vacancy on Main Street. And there was high crime rates. And if you look at Patchogue today, Patchogue's got, 25, 30 new restaurants. They've seen increases to their, school increases in terms of school funding, not school students necessarily, but huge growth in downtown Patchogue. And I think that's, you're seeing those efforts again across Long Island in places like Farmingdale and Riverhead and Mineola and a number of other communities.
Absolutely. And Patchogue was recently voted one of the most lively neighborhoods in America. So I can see what you're saying about trying to revitalize these downtowns, both to increase the attractiveness of the downtown so that individuals on Long Island aren't getting educated and then moving away to different locations across the nation where they can find that lifestyle, but also with the affordability component. So with multifamily housing, what is one of the biggest barriers that you face in trying to bring these new apartments to Long Island?
It's the entitlement process and getting through your zoning and approval process. It's certainly a bottleneck, and oftentimes because we have such segregated use zoning throughout the island, it means if you're going to be adding housing in these downtown areas, it means amending or rewriting new zoning codes. And I would certainly say that's our biggest bottleneck. So it's really important, from day one, working, hand in hand with local officials, stakeholders, community organizations to make sure that it's a project that they want in their community. There's a lot of demand for it. So, it's not, life's too short to fight it. So if they don't want it, find somewhere else that does.
And Michelle mentioned earlier that the units that are being developed now are pretty much getting taken off the market very quickly because there is so much pent up demand. So Kelley, how do you think that adding these apartments add to overall affordability for the island?
It's the supply and demand issue. You know, I noted before that we are very undersupplied here on Long Island, and because of that, you're seeing, you know, there's huge cost of living implications. So when supply and demand starts to level out, you're going to see prices start dropping. So you have Class A, B, and C apartments, for instance, and there's really not too much of a gap on Class A and Class C apartment pricing. There is a gap, but that gap is not what it should be translating if supply and demand were leveled out.
But there is more of a direct requirement for affordability units within new developments. Could you speak a bit about that as well?
Yeah, I think the affordability issue is a supply demand issue, you know, first and foremost. If we're able to increase supply, we're going to be able to, you know, that's the best way to resolve the affordability issue. But there are mandates in pretty much every municipality and or IDA that requires some type of affordability component. And those vary from municipality to municipality. And I'm sure Michelle will be able to speak to it better than I could, but those, you know, and that percentage of the number of units that you're building also varies, but there are various programs in each municipality. And then there's also great grant programs for, you know, to help encourage developers to build affordable housing. Land pricing and taxes are very expensive out here. And so in order to attract the financing, you have to meet certain returns in these developments. And without some of that support, it's almost impossible.
Agreed. Now, Reza, not everyone can work on multifamily developments, and some landowners have extra land and they might want to offset some of their costs. And so accessory apartments seem to be one of the solutions for individuals looking to gain extra income or at least house additional generations on their land. So could you explain what accessory apartments are?
Sure. So an accessory apartment, at least in the context of Long Island, usually means something like a basement apartment or an attic apartment or some kind of additional living space in connection with the single family home. Sometimes you will find 2-family homes, 3-family homes, but it's not as common in Long Island because of the prevalence of the single family home. So essentially it's, you have your own house, and for whatever reason you want to generate money, you have friends, people, family members that want to live in a separate space, you create an apartment or you create a living space separate from the actual primary use as far as the zoning code looks at it. And there are specific provisions pretty much in every zoning code dictating, you know, what the regulations are for such accessory apartments, so to speak.
And when someone wants to add accessory apartments into their property, what considerations might they have to look into in order to properly?
So yeah, first and foremost, you're going to look at the zoning code of where you live. If you're in a village, the village code, the town code, etc. And to be honest, it's not easy. Long Island is pretty restrictive, despite the fact that you see a lot of accessory apartments throughout Long Island. I would say if 50% of them are legal, that's high. You know, it's probably less than that, maybe a third. By legal, I mean that you have gotten a certificate of occupancy from the local zoning board, allowing you to have that in place. Unless your specific zoning, your specific zone that the house is in allows for it, number one, because some communities don't even allow for it. And even if it does, the requirements are pretty strict. They require everything to be brought up to code. They require not most, but a lot of municipalities now, and are trending toward that, are requiring rental permits now, which require yearly or bi-yearly inspections and you know, applications and application fees. So my own opinion is that the local governments certainly don't make it easy in Long Island. They maybe are starting to look at that and relax that a little bit, but it's more or less the Wild West. You know, people, if they want to set up an accessory apartment, generally they'll do it, and they won't do it with permission, which creates all kinds of problems in and of itself.
And so in terms of making accessory apartments more available, that tends to mean that the zoning codes and permits for these apartments should be a bit more streamlined than they actually are. So could you comment a bit more on how adoption of accessory apartments could become more widely available?
Yeah, I mean, look, it's other cities in the country, from what I understand. I know Los Angeles has done this, where they've recognized a shortage, just like we have here, and they've made sweeping changes and said, look, anybody that has a single family home, they can have an accessory apartment. These are some general kind of loose rules as to how to do it. The challenge we face here in Long Island is because of what I was saying about the government. You have so many different levels of government here, and villages, towns, and none of them match up. They're all different in their own way. They have similarities, but you would literally have to go to every single one of these different boards, which I would assume there's hundreds, and have to enact reform on each level. And I'm sure each one would not come out the same. So it really is a challenge to try to enact that kind of common sense code change specifically in Long Island because of the system that we have. I mean, it's not to say that it's impossible, and that there's certainly benefits for it. And there's also certainly a lot of controversy around that. A lot of people don't want that. And a lot of people will fight that and say that, no, this is why we moved here. We want the single family home. We don't want everybody having apartments in their back, in their basements or attics or whatnot. So it's a challenge. I don't have the solution, but I think if everybody, is motivated towards that, I think certain changes can be made.
I believe, if I could just interject, he's saying make sure you vote on Tuesday. And research, local races have a lot more impact on our lives than, president might. And that's why it's important to really know what's going on in your local government. Because how many times do we go, oh, why is this that way? And we don't, and there are methods to get involved and change it, and they make it difficult, by nature. But just like they did in Los Angeles, as you said, which is thought of as a more progressive part of the country, it means the same thing might be possible here. We have to kind of know which levers to pull. And if I could just interject one more thing, I believe Kelley said that the brain drain in Suffolk County and Long Island as a whole is one of the biggest problems that we're going to be encountering over the next few years as the population gets older and talented young people move out. And I heard County Executive Steve Bellone speak maybe 3 years ago at a Babylon Chamber of Commerce meeting, and he said the same exact thing. That is his biggest focus and his biggest fear about as the county moves forward. Prices go up, the population is getting older, which means less people paying taxes, less people, essentially supporting the government. And what do we do to try to reverse that? And it does start in a lot of ways with affordable housing, and other incentives to kind of just make it more affordable for people to live here.
That's definitely a huge consideration to what we're speaking about, because as you're explaining, the local officials are really who set the standard for our local communities. But in terms of rental housing, just adding on the accessory apartment conversation, not necessarily if you're looking for rental housing on Long Island, will you only be looking at accessory apartments? And we don't have Whitney on the call, so maybe Kelley, I think you might be able to speak about where someone might look for rental housing on Long Island, not only in multifamily developments, but just in general, where might individuals look for rental housing?
In terms of how they would look?
Yes.
Okay. I mean, there's a number of a number of websites. If you're just, I would just use the internet. But there's just Google where you'd like to live, Suffolk County rental housing, and then there's a million listings there. With respect to specific properties, or if you're looking for support from an affordable standpoint, I would certainly reach out to an organization like Long Island Housing Partnership. They have great input, great direction, and they'll be able to definitely assist in that way. But I would just use one of the online platforms for searching. You can narrow down by price range and location and all that good stuff.
And Reza, when someone is trying to rent an apartment, there's a lot of considerations with the lease and its structure and the transaction process. So could you mention a few of the legal considerations of renting an apartment?
Yeah, so whether you're going to rent an accessory apartment or one that's built in a large complex or part of a mixed use development, you're going to have a lease. Now, people can occupy apartments without a written lease, but that doesn't mean that there's no lease. If you have an oral understanding as to what the rent is and what the term is, that's still considered a lease in the eyes of the law. It's just harder to prove what those terms are if there's an issue. So you will have to sign a lease. Most accessory apartment leases will be individual owners downloading something off of the internet and using that, or coming up with something on their own, which leads to all kinds of issues in and of itself, mostly for the landlord, to be honest. And if you're leasing from a company, one of the big developers, or like Fairfield or something like that, they have their own forms that are pretty well developed. And to be honest, most leases are generally protective of the landlord more they are of the tenants. There are certain laws that override any provisions in a lease that a landlord may try to put in there. But you have to be careful. I mean, people, I understand they don't want to spend more money because housing's already expensive as it is. But if you can afford to go to an attorney and have them take a look at it, make some comments, and at least get you something that's fair and isn't completely one-sided. But again, depending on who the landlord is, they may or may not be willing to negotiate any of those terms.
So do you think just a general renter should contact an attorney, or do you think that it's pretty well established that an oral or written lease will protect the renter, and as long as they document their process, then they should be okay? Do you think they should contact attorneys?
I mean, look, coming from an attorney, I would say they should, but it's always a good idea. But I understand people don't want to spend extra money, if they're already putting together all the money they have for a security deposit, or having to pay certain things in advance. Now, actually, they did change the law recently. You can't pay more than 1 month in advance anymore on any residential apartments. That includes the security deposit. So before, when landlords were asking for security plus first month, last month, that's not allowed anymore. You can only ask for that security deposit, and that's it. There are other laws, but it's difficult. If you're a young person renting for their first time, you don't really know what you're getting into. You don't know what to look for, what to not look for. Sometimes you learn as you go, and you make certain mistakes and whatnot. But if you have access to an attorney and you can afford one, it certainly helps. It doesn't hurt.
Now, moving from rentals to actually home buying, Mark, would you be able to speak a bit about the home purchasing process? I know that applying for a mortgage and getting approved for a mortgage is one of the biggest parts of the transaction process. So not only could you explain where you come in to play when someone's trying to purchase a home, but could you also explain a bit about searching for a home and then the closing?
Certainly. Ideally, you'd want to speak to a loan officer before you really do anything else with your home search, because never mind, maybe folks here, are going to graduate with a business degree and be able to, get a six-figure job out of school, so they know they're going to be able to qualify to at least purchase something. But, we can really spend the time to go over what a monthly payment is going to look like on, on a home purchase, compare that to what it would be on a rental. Something to keep in mind is, you're going to be making one payment towards all the expenses associated with your house generally. So that means the principal and interest on your mortgage, your property taxes, and your homeowner insurance will be placed into an escrow account that you pay 1/12 of every month. And then you're making one payment that kind of covers all those expenses, and then you're never responsible for paying the taxes or insurance yourself. Your loan servicer is going to handle it. And if you don't have 20% to put down on your home purchase, that's not a problem. You can put down as little as 3%, which, just a sidebar of it, when we go over the cost of renting and we're talking about first month's rent, security deposit, and a broker fee, well, you're at 3% down right there. And there's closing costs that are associated with a mortgage also, but there are methods to either get credits from your lender or have the seller pick some of those up. But you would want responsibly, you want to speak to a loan officer at first start, because they're going to let you know what a monthly payment is going to look like on, a particular home that you're interested in. And then before you go into that house and fall in love with, the backyard and the whatever else, you're aware of what it's going to cost you and aware if it's something that's going to work with you. And then you're kind of making sure you're making the right decision, and rather than doing it the reverse, which is what happens a lot of times, because who's excited to go talk to a bank and turn over your W-2s and, answer questions about why your credit's under 700? Nobody, but everybody loves to see a brand new house. So but that's why you really want to know what you're getting into from the beginning, and just, again, really know what you can afford, what you feel comfortable with, which again tend to be two different things, because we qualify based off somebody's total monthly gross income. So if you make $100,000 annually, that equates to $8,333 a month. If you can go up to a 49% debt to income ratio and you don't have any debt, well, you can qualify for essentially a $4,000 a month mortgage payment. But first of all, that's just the mortgage payment, and that's just factoring whatever shows in your credit reports, not factoring your utilities, food, anything else. So that's why what you can qualify for and what you're comfortable with are two different things. So it can really help to speak to a loan officer before you do anything else and really know 100% what you want to look for, what price range you want to look in. If you go above that, what the difference in payment is going to be, and really make an educated decision to start your search with.
Now, Mark, we're going to do a deep dive on the mortgage process in a few minutes. But before we go into that, Reza, would you mind speaking about the legal considerations of purchasing a house? Because it seems to be a bit more substantial than what you would have to look into for renting a house.
Yeah, it's definitely more substantial. In New York, you basically need an attorney for a purchase or sale. Other states don't. Not every other state requires that. And essentially, because and I do recommend that you speak to a mortgage loan officer prior to getting to this stage, because you have to know that you can afford it and how you're going to pay for it. But once you have an accepted offer, a general overview is that then the seller's attorney is going to prepare a contract, is going to send it to the purchaser's attorney. There's going to be some negotiation back and forth. You're going to agree on a final version. Once the contract is signed, that's when the down payment is submitted, and the seller's attorney then holds that in escrow until the transaction closes. That's the point at which you would then make your formal application for the mortgage. You wait for what's called a commitment letter, which if the transaction is contingent on financing, which not, for young people, it usually is, but, it can be a cash deal where you just have the money and you're going to buy it outright. Then you get the commitment. You're probably going to need a survey. Your attorney will help you get that, and your attorney is going to help you order a title report as well. And the title report is then going to identify any title issues that the seller usually has to clear up. Once title is quote unquote clear, then you can move on to closing with the lender's approval as well. And essentially it's a sit down 2 or 3 hour process, signing loan documents, signing transfer and deed documents. And at that point you own the house. But there's a lot to consider. There's a lot to know. The contract itself, there can be standard provisions and there can be a lot of unique provisions depending on the house or the property that you're buying. And a lot of the things that come up in Long Island is, again, going back to these issues about certificates of occupancy and, whether certain additions, accessory apartments, things like that are legal, quote unquote, in the eyes of the law, and whether that's going to become an issue with the bank, with the town, village, etc. So it's a very general overview of the process, but it can be daunting. You know, you definitely need an attorney to guide you through it.
Now, the additions and certificate of occupancy, as you mentioned, are one of the biggest issues with purchasing a home. But in terms of the title and the surveys, what do you see as the most common issues with the title and survey?
Title is usually, what they'll do is they'll search everybody to see if there's any judgments. They'll see if there's any liens other than the mortgage, if there is one that's expected. But sometimes you'll see things like tax liens show up, judgments show up that people weren't expecting. And this is mostly on the seller side again. You're going to see if there's violations against the property that have not been cured. And sometimes these things can be addressed easily with money or with submitting paperwork, or sometimes they can take months to resolve because there's an old mortgage, for example, that was satisfied, but whoever, 2-3 transactions ago forgot to file a satisfaction of mortgage. Now you have to track down that old company that's could be out of business and bought up by somebody else and submit paperwork and convince the title company to admit it. And it can get, the delays can add up depending on what happens. But it's all part of the process. It's people do it and people get through it. It's just can be a little stressful for first-time home buyers.
And to always close. Maybe, even it might take a while, but we tend to always get to the end goal.
Right.
Now, staying with you, Mark, what are the actual financial benefits and costs comparing renting or buying a home?
Well, the most basic one would obviously be that you're building equity in something that you own. If you rent somewhere for 3 years, and then you turn around and you want to buy something, is your landlord going to reimburse you for any of the rent that you paid, to help you with a down payment on your purchase? But if you go out east on Long Island, less so now. And so I live out in Medford, I had a daughter 3 years ago, and so just give you guys a little anecdote. We were looking for a rental, and I realized I could buy a home out in Suffolk County, for about the same price that I would be renting a 2-bedroom apartment. I was able to get a mortgage for around $2,000 a month. Fast forward to now, and we have another one on the way, and we weren't sure if we were going to, stick around or, take a year or whatever. But we know we need more space. And then I noticed that homes around same kind of house around the air, as mine, around the same area, are going for about $90,000 more than I paid for mine back in 2017, because the market is so hectic right now. So therefore, suddenly, like I, have all this equity in my home, and I'm able to sell it and purchase a new home that, otherwise I might not have, enough liquid funds to, be able to buy something and have a monthly payment that I'm comfortable with. So the biggest thing is that because, you hear the expression, money rich and house poor. A way to look at it is if you're renting, let's say you're paying $2,000 a month for rent, and that, it's a bit of a struggle. So you're able to come up with your $2,000 for rent, but you're not able to save much more than that. You're going to end up in a constant loop where you're not going to be able to get out of that rental, unless you can access some home buying grants, or if you have a generous family member who will give you a gift. And that rent is always subject to go up every year, whereas the payment on your mortgage is going to be with a 30-year fixed interest rate generally. So while your property taxes, your home insurance might tick up a bit, the payment on your mortgage will be the same for the duration that you own the home. And the obvious of so even though maybe you're just able to make your mortgage and your other expenses every month, but what you might not think of is that you're building equity every month at a rate that your money is going to grow much higher than if you invested it in, say, the stock market or anything else, and with a much less volatile swing. So that's something to think of too. So maybe you have to extend yourself a bit to buy something, but while I tell people not to focus too much on the investment potential of a home that they plan to live in, because you drive yourself crazy, you know, like you have, if you're going to live there, you got to decide it's a place you want to live and, you know, how long you want to stay there, but you're going to build equity in something. You are investing your money so that it can grow into something else that will allow you more opportunity in the future, whether that's the ability to do a cash out refinance, you know, and pull money out and buy an investment property for yourself if you want to keep your current home. But you're essentially, and especially with rates being so low now, not that I'm like, you know, trying to get into that end of things. But if you're borrowing money at a 3% or lower interest rate, you know, you're not going to really grow it at that, you know, a bigger rate anywhere else. So there's just so many ways where buying a home, even though the upfront cost might be a little more than renting, can be a tremendous vehicle to really set you up for the future, you know, and allow you to build equity in something that can, you know, take it to the next step.
And I really like how you explained your personal situation and how purchasing home was beneficial to you. But as I'm graduating in December, I'm mostly looking at places to rent or short-term housing situations because I may be moving to Hopkins or that general area. So I might be applying for jobs that are in that area, and I, in 3 years time frame, may be in a completely different position. So that's the argument for renting a house in terms of a huge investment into purchasing a home, although there are benefits financially of building
Well,
up.
I would say, sorry, but I would say it's almost the opposite. If you think 3 years is your time frame, and you know, I just gave you an example of in Suffolk County obviously has lower real estate values than Nassau County, right? So I just gave an example of how I saw a tremendous growth in my purchase just in a 3-year time frame. And I was able to purchase, you know, with a 3.5% down, and yeah, I knew the real estate agent, so they gave me it. So the seller covered a lot of my closing costs. So my initial investment out of pocket was maybe 80, you know, like under $10,000. And then, you know, you're paying the mortgage every month, but if you're paying rent, you're paying something every month anyway, and you're knocking down your principal balance every month. And now I'm able to take that, and I'm working from home now. My wife and I are going to go look at houses in Connecticut. You know, even though that's kind of counter to what this webinar is about. But still, you know, it gives you something that's yours that you can parlay into something else. So while the responsibility of owning a home and the upfront cost might be deterrents, the potential of growth in the future can be a real reason to look at. And not for nothing, the fact that you're going to own your own house and not be living in somebody else's. And you can also not sell the house when you move out of Hopkins. You can rent it out, and then it'll continue to grow and grow and grow. And if you're just looking at it in the aspect of how can you make your money work for you, investing in real estate really anywhere in the New York metro region is going to be much safer than, say, you know, hoping that the airlines bounce back and buying stocks right now. If we're just thinking in terms of how to grow our wealth and not have to work for the rest of our lives.
And so how does someone position themselves financially to actually be ready to purchase a home? What do they have to consider there?
So you can get a conventional loan. There's two. Let me just give a quick overview of mortgages in general. There are conventional loans, which are backed by Fannie Mae and Freddie Mac, which are government sponsored. They're like the MTA in that they're individual corporations, but they're operated by the government. And Fannie Mae and Freddie Mac set the guidelines that every major bank, be it Chase or Wells Fargo or Citi or anyone else you can think of, that's who they underwrite to. So interest rates are able to be so low and be so not volatile because everybody's writing to those Fannie Mae and Freddie Mac guidelines. And especially during COVID, when all the banks wanted to pull out of mortgages because they just had to mitigate their loss when the economy was tanking, Fannie and Freddie pledged to buy up as many mortgage bonds as they possibly could to keep liquidity in the market. And that's what kept rates low. So the government kind of surged to just keep a really steady level of interest rates and loan pricing and guidelines, which also makes it so that people who shouldn't be qualifying for a home aren't able to, and therefore they don't get foreclosed on. And all this stuff sounds like common sense, but you know, if everybody has time, you know, they should watch the movie The Big Short that came out a couple of years ago, which gives like a real easy understand overview of what happened in 2008 and how the whole world fell apart because there weren't essentially any guidelines to how they gave mortgages. You know, that's not the case now. Conventional loans are underwritten to Fannie Mae and Freddie Mac guidelines, and if you put down less than 20%, you get mortgage insurance on your loan from a private mortgage insurance company. And if you put down 20% on your home, you don't have any mortgage insurance. An FHA loan is insured directly by the government, the Housing and Urban Development and Federal Housing Administration. So because it's insured by the government, I mean, the downside is even if you put down 20%, you're still going to have mortgage insurance, but they'll allow you to qualify with a lower down payment, a minimum of 3.5%, a lower FICO credit score, a minimum of 620, a higher debt to income ratio. You can go up to 57% for your total debt on your credit report plus your mortgage, as opposed to where the conventional you can only do 49%. And also a big one, if we're just talking in terms of, getting, young folks prepared to buy a home, is on an FHA loan, you can get a full seller's concession, meaning the seller is allowed to cover all of your closing costs. Now, you can't have your closing costs rolled into your mortgage, which is not something that's done because it would allow the bank to kind of manipulate closing costs and, to up your loan amount. But what essentially happens, especially these days when the market's so crazy and we're not really worried about if a home is going to appraise at the value that's under contract for. So you could say you're going to buy a home for $300,000, that's what it's listed for, but you want some help for your closing costs. So you make the contract price $315,000, and that additional $15,000 is coming back to the buyer to cover his closing costs. The seller still gets, the $300,000 that he wants to net. And, we have a deal that works for everybody, and the buyer essentially only has to come up with his 3.5% down payment, which again, is comparable to what you have to pay to get into a rental in a lot of cases. And that money.
If I could interject one thing in there, Mark, everything you're saying is completely accurate. But you touched on that the market right now is so hot in Long Island, and it's primarily because, at least from what I'm seeing, you've got a ton of people coming from the city that are looking to either move or find space out here. And it's a lot of young couples and it's young professionals. And some of them, to be honest, I don't know where it's all coming from, but they all seem to come pretty well funded. And sellers are, even though a lot of these programs, like you're saying, the FHA and the 3.5% are available to first-time buyers and people that don't qualify or don't have the cash, sellers are being very picky because there's so much demand and so many offers on a particular house. You may not get that house because somebody else is coming from Brooklyn that's willing to put down the 20% or willing to do a cash deal. And the seller can choose, because in a seller's mind, it's better to have a cash deal or someone that's putting more money down, because there's less of a risk that transaction is going to fall apart because the borrower doesn't get the loan. So anyway, just throwing that in.
100%. And yeah, as an attorney, because going through listing my own home right now, I'm getting much different advice as to what offers are, strong from my real estate agent than I am from my attorney. Whether it's somebody coming with a low down payment, the seller's concession or grants, the real estate agent might just we all have different roles in the transaction, right? The real estate agent's job is to meet the client, be the person who actually essentially makes the deal happen and puts it under contract. But they don't know, and a lot of times, what goes on the attorney and the banker end to actually get that deal from going under contract to closing, and all the things that can go wrong. But at the same time, what you're saying is 100% correct, and that's why it just becomes about partnering with a good real estate agent on the buyer's end. Something to understand also, as a buyer, you're not paying your real estate agent commission. Okay, commission is paid by the seller when the listing agent signs up a listing. They agree to a certain commission rate, whether it's 4%, 5%, and that seller is paying that 5% commission, regardless if the listing agent sells the property themselves or if a buyer's agent comes and shows up with a buyer. If the listing agent sells the property themselves, that full 5% is theirs. If another real estate agent comes to the buyer, then they're splitting that commission between each other. So if you have a good agent and you have a loan officer who's qualified you the right way, and a lot of real estate agents work with loan officers that they know they can trust for exactly this reason, and your loan officer is going to give your real estate agent a full idea of what your situation is, how you qualify, what situation is going to be an offer that's going to work for you and a deal that we're going to be able to close. And that way, when your real estate is making appointments, he can let the listing agent know, look, my person's coming in with 3.5%. They have excellent credit, but they just have 3.5% down. They're going to need a seller's concession. Is that something your seller would be interested in? And we can find that out before you spend your time, seeing the property. So I guess it's just everything you're saying is obviously correct. If you have, less liquidity and you have less, just stronger terms to qualify, you're going to lose out to somebody who's doing better than you. But at the same time, you lose nothing by exploring the option, buying rather than renting, especially if, your monthly payment, which is what most of us really are focused on, is going to be, close to the same amount to own versus to rent.
Now, Mark, I want to save the rest of what you may have to contribute to the student question aspect of it, because I want to move on to what Michelle can provide with in terms of the different programs available for assistance in terms of down payments, as well as different things that individuals can look for in terms of attaining housing on Long Island. So just first, Michelle, what organizations offer down payment assistance on Long Island?
There's a few organizations here on Long Island that do similar work as us. I know CDC of Long Island is one of them. They have a grant they offer. CHI is another one. I think us three are the main ones that offer grants. And sometimes you can combine these grants as long as they're not coming from the same funding source. A first-time home buyer can actually combine down payment assistance, and some of these down payment assistance grants even have rehab options to them, where there's also rehab assistance for the home that you purchase. Of course, there's income guidelines, there's credit guidelines, there's a whole bunch of things associated with being deemed eligible for any of these grants, and meeting with a housing counselor at a HUD certified counseling agency is the key to begin this whole entire process. If you're out there and you're even considering becoming a first-time home buyer, or it's something that you're thinking about, the first step, I think, before you meet with a real estate agent, before you meet with the mortgage people, is to do housing counseling, is to do a one-on-one mortgage counseling session, or even attend an orientation for first-time home buyers, because you'll be surprised on what is needed, where you need to be in order to be able to purchase a home. A lot goes into it. Your income, your credit, your assets. These are all things that we review when you meet with us. We see where your affordability is. We kind of do like a pre-qualification. We're not a lender by all means, but we work so closely with all the major lenders that we know what they're looking for. So when we meet with the client, we know what they're going to be looking at, how they're calculating income, things like that. And at the same time, since we know what their income is and we know what their credit is, we know if they qualify for grants. We know if right now Town of Babylon and Town of Brookhaven grants are open for first-time home buyers. You don't have to be living in these towns to apply for these grants. It's open to everyone. There are income, maxes that you can meet. It's based on household size, and then the max household income. I believe for one individual, you can't make more than around $70,000 to qualify. So it's definitely not for everyone. But let's say you're an individual with a child. Now your household size is 2. Now your income can be higher. So that's how that works. Town of Babylon, Town of Brookhaven, both those grants are for $20,000. Okay, so you can get up to $20,000 for down payment assistance if you qualify. And you can use that along with a mortgage product that might be offering additional assistance. There's a lot of mortgage products out there that also have lender credits, that have grants themselves embedded in them, that you can combine along with the down payment assistance grants. It is a process. You have to apply. Our website, we try to go green. So all the guidelines, all the applications, everything's available right on our website, lihp.org. You can see if you qualify before you even apply, by just reading what the income qualifications are. It's helped so many people be able to purchase. Like I said, since rent is so high on Long Island, it's harder for individuals to save. So when they get this initial down payment assistance, it helps them greatly. Keep in mind though, you're not getting like a check from us. Like you get approved for the grant and we're giving you a check. So now you can go look for a house and here's my 20 grand. It doesn't work that way. It's given to you at the closing. So we say it's down payment assistance, but in actuality, usually a lot of people use it for closing costs. And closing costs to purchase a house on Long Island, easily 15, 18,000 are going into closing costs. And Mark did touch base on doing a seller's concession to be able to pay for your closing costs. But your house also has to appraise for the higher price. And on Long Island right now, houses are selling for what they're appraising. So sometimes it's hard to be able to do a sales concession in the market right now. I did a sales concession when I purchased my first house. That was over 15 years ago, no problem. But now sales concessions are getting a little bit more difficult because even Reza mentioned, people come from the city with a whole bunch of money that us Long Islanders apparently don't have to purchase houses. And a lot of our locals are getting outbidded on houses. And grants is a huge help, but you do have to have your own assets as well, ready and in hand to be able to purchase something. But our website is a wealth of information. We always keep it updated. Follow us on all our social media. We have Instagram, we're on Twitter, we're on Facebook, because when new things come up, we put them right on there. There's a lottery actually that just went on, I think today or yesterday, if I'm not mistaken. I believe we're building 2 houses in the Bayshore area, I believe it is. And you can be in the 100% HUD to AMI. So it's a higher income bracket. So, and the houses I believe are going for about $379, which is pretty low compared to what the market is right now. Because our goal is to build affordable housing. You know, so whenever we get any of these properties, we try to keep it within the affordability range here on Long Island, which unfortunately is not as affordable as I would like it to be. But considering Long Island, it's $379 is starting to be considered more affordable than unfortunately it used to be. But we also do a lot of condos, affordable condos, you know, for a lot of people, that's something they don't want the maintenance of a house. So a condo is a great option for them. And it allows them to purchase in some great areas that normally they wouldn't be able to afford to purchase in. But counseling is the first step, you know, because that's where we're able to see where the client is. And not everyone is ready to purchase. They might think they're ready to purchase, but they're not. Whether it's credit issues, whether it's not enough of their own assets to move forward right now, or a lot of people got affected with the pandemic with their income. So the lenders are being, you know, they're looking into that. Yes, there's some leeway. But if you were doing 40 hours before the pandemic, now you're back to work, but they're only giving you 30 hours, your income obviously has been affected. And the lender is looking at things like that as well. So if you are a first-time home buyer out there, please visit us, give us a call at the office. We're doing Zoom and phone appointments right now. We're not doing face-to-face appointments, obviously, but it's a great first step. And once we pretty much get you ready for the lender, for the attorneys, for everybody, because when you leave our office, you're highly educated. And if you are mortgageable, we work, like I said, we work with lenders. So we're able to give you 3 different options, at least, you know, of lending products that you may want to be able to use. And if you choose one of those, we actually connect you to that lender. You know, it's kind of like building your team. You know, when you're a buyer, you want to have a great team around you. You want to have the loan officer, you want to have your attorney, your home inspector, your real estate agent. It's a whole team that you're building. So you want to make sure that you're working with the right people who have your best interests at heart, you know. And since we've been doing this for over 30 years, you know, we've built some great relationships that we can go ahead and forward that to you and give you that information.
Now, before we move into the final question and any student questions that are in the Q&A box, Michelle, what time frame should someone look into in terms of applying for mortgage counseling and the different down payment assistance programs? Should they look into all this stuff right now, or should they wait until they're actually within a year of purchasing a home? And also, what is the time frame for applying and actually going through that process?
Sure. Our grants only open a certain time each year. So if you're even looking right now, just see what the guidelines are, see if you even qualify, first of all. So you're not waiting on that later on the line. The counseling session is going to tell you pretty much whether anyone who's even thinking whether it's a year from now or 6 months or 3 months from now should do the mortgage counseling. Because if you're ready, we move you forward. If you're not, we're doing an action plan. So if you're looking to purchase in a year, this is what you need to do to be ready in that year frame. Grants are very specific, with the time frame. So you have to apply by a specific date, you have to be in contract by a specific date, and you have to close by a specific date. So if you're not ready right now, then don't apply for a grant. Just do the counseling for now, so we have an idea of where you're at. And then in general, the process itself, it really is going to come down to how long it takes for you to find a home. That's, I think, the longest process is being able to find, because Mark can get you approved. The real estate agent can start looking for houses, but getting an accepted offer, that's, I think, what's going to take the longest time, to be honest, in the market we're in right now, because there's so much competition going on.
And does anyone want to take on this final question of, does Long Island have a bright future?
I hope so.
I think so.
Yeah, I think so. I think, I have 4 kids. I don't know about anybody else here on the panel. I have 4 boys. And the first thing I tell them is, you're not moving out of my house unless it is to purchase a home. I refuse to allow them to move out to go rent and spend their money. I'm a cool parent. You can chill in my house, take care of your responsibilities, don't get me wrong. But I think we need to help our children be ready to purchase. We need to start them at a young age learning how to save and know the importance of credit. You're in college now, Sean. I hope you've been keeping your credit up to par, because that is huge nowadays. Your credit is the determining factor for a lot of things. So I say, as long as we educate our children and we educate them, I would say in the high school level, of the importance of savings and having assets and having good credit, when they're ready to purchase, they're a much educated group. I wasn't educated when I purchased my first home. I'm first generation American. I'm the first to own a home, in my family. So I didn't get any of this, so I think this is the best thing ever, to be able to educate the youth at such an early part, so that they make the right decisions. I got lucky, but some haven't been so I think this is a great forum to put out there. But I think Long Island's great. I don't want people moving out of Long Island.
We do have one question. Can you obtain Sony May and Long Island Housing Partnership assistance together? Mm-hmm. Another question is also, are there any employers on Long Island that offer benefits to employees for housing assistance?
Yep, those are great questions. Sony May is a New York State mortgage product. It's awesome. It's great for first-time home buyers. Not all lenders participate in doing Sony May loans, but Sony May allows for as many grants as you want to be used. There can be as many liens against the property using a Sony May mortgage product. Not to mention, Sony May also has a grant embedded in it that would give you 3% of the purchase price as well. Of course, you have to be deemed eligible for it, just like any other mortgage product. But you can definitely use all our grants at the Long Island Housing Partnership with a Sony May loan product. And what was the second part of the question? I'm sorry.
Are there any employers on Long Island that offer benefits to employees for housing assistance?
Yeah, we participate. We administer one of the biggest employer assistance housing programs. There are major employers. You do have to ask your employer if they participate in the employer assistance program. That's not public information that we give out, but a lot of the hospitals participate, the major hospitals, that's what a lot of the colleges participate. So you have to just ask your HR department whether you participate, if they participate in the employer assistance program. And if they do, you would be eligible for, as long as you meet the income requirements, for not only down payment assistance, but also rehab assistance. Plus, the employer gives from $3,000 to $10,000 down payment assistance as well, depending on your employer. So that is one of our best programs out there.
Dan Mavrogian, do you want to take on this question that is in the Q&A box?
Yes, no problem. So Raul Vaya has asked, can foreign citizens buy houses, and do banks approve foreign citizens? And he indicated he has an 800 plus credit score. So if someone on the panel would want to answer.
Well, so the short answer is yes. There's so you got to understand what constitutes foreign, because now we're mentioning that he has an 800 credit score. Is that an 800 credit score in the U.S.? Because then he might actually have, status in the U.S. If anybody who's legally present in the U.S. With a work visa or a green card or obviously citizenship is eligible for financing through Fannie Mae and Freddie Mac and FHA. Now, if somebody is foreign, as in they're only a citizen of another country and they do not have legal residence in the United States, then you are not eligible for essentially government-backed financing. You would have to get what's known as a non-QM or a non-qualifying mortgage. And then at that point, yes, there are outlets. So at my bank, we're what's called a correspondent lender. So we're a bank that loans in our own name. We don't have the capacity to service, meaning manage and collect the payments on all the loans we write. So what we do is we package them up into mortgage-backed securities, and the larger banks, such as a Wells Fargo or Citi or whomever, purchase these blocks of mortgages from us, and they become the person who is the servicer and who the buyer makes their payments to. The terms of the loan can never change after closing. There's a lot of laws associated with that. The point is that anything that a Wells Fargo or Chase or Citi or any bank that we sell to will do, we can do. And anything that Fannie or Freddie or FHA will do, the big banks will do, and thus by virtue we can do. Prior to COVID, we could do a lot of non-QM mortgages, such as the general Fannie Mae loan requires a 2-year history of tax filings and 2 years of W-2s and pay stubs, showing what your monthly salary is. But we were able to do non-QM loans where if someone owns a business, and a lot of business owners write off a lot of their expenses, so their gross income that we can actually qualify off of is very low. Rather than going off their tax filings, we could go off a business owner's monthly deposit into their business bank account, essentially qualify based off their cash flow. Now, this is not a Fannie Mae loan, so your interest rate's not going to be 3%. It might be like 5 to 6%. But still, the folks that these products are used by love them because they've been told that they can't buy a home. They have to continue to overpay for rent. And now, they're being told they can buy a home. They don't care as much about the high interest rate. So in that same portfolio of non-QM loan products, we can also do what we call foreign national loans. We can do it as an investment property. Where the buyer, we need their funds to close in a U.S. bank prior to closing. However, we can source them from a bank overseas to qualify them. They don't need to show income. We could do it as a debt service coverage loan, where as long as the potential market rent on the property covers what the buyer's monthly payment would be, they will utilize that as income and qualify. And we can also do it as a vacation home. Where we use we can still do it as a debt service coverage. Minimum down payment is 35%. And we like to get whatever documentation we can for them overseas, such as a credit report or any income documents they might have. But even if they don't have that, it's still possible for that person to get financing. So the short answer is yes, you can get a mortgage if you're foreign. And this is not in most other countries, you can't. Like my wife is from Brazil and we're looking at buying property down there, and I'm not able to do anything without investing a lot of money down there first. So, the short answer is yes, it's possible, but not, at the general prime interest rates that you're going to see available, because those are one of the criteria for Fannie Mae lending is that the person has legal status in the U.S. for obvious reasons, because if you're not living in the U.S. full time and you're going to buy a home, well, you could just abandon that home and move back to another country, and it's not going to, affect you at all because you're not establishing credit or residency in the U.S. And then that lender would be on the hook for that loan on that home and have to foreclose, and which is a very expensive process. So that's why they don't lend to folks that don't have status in the U.S. But it is something it's possible if you want to pursue it.
And regarding just grants in general as well, we do require you be an American citizen or permanent legal resident. That is a requirement on the application for us. Unfortunately, work visas cannot be renewed if they choose not to. So you do have to be a permanent legal resident.
Well, work visas are acceptable to qualify for a mortgage. As long as you're here, you won't get the green payment assistance, but you can get a Fannie Mae insured mortgage with a standard interest rate.
Okay, I don't see any more questions in the Q&A. So I want to thank Dan, my fellow REI intern, for helping organize this event and marketing it, as well as the panelists that have joined us for this past hour, giving a lot of information that definitely we need to look more into if you're looking to rent or buy on Long Island. It's a very substantial process. So each of these professionals on the call would be willing to provide their services to you and speak with you more and give their information. So I'll be providing some useful links in an email after this, as well as some contact information so that you can connect with them after. But I want to thank everyone on the panel for participating, and I hope everyone got a lot of information from this.
Thank you for having us.
Thank you.
You're welcome. Thank you.
No.
Thanks, Sean.